Let's bring on board then our guests. We've got Gaurav Bissa, who's joining in on the show on the technicals. And from our research team, then joining in right now, we've got Ashesha as well as Vamakshi. Let's kickstart then with the first stock of the day. And I'm going to be talking about Tata Steel Long. The company has come out with its latest updates where they've said on the operational side that the saleable steel sales are at 298 million tons in Q4. This is versus 194 million tons, so that's up 53% sequentially. The crude steel production stands at about 330 million tons, up about 45% sequentially, and you've got that higher in terms of production as well as in sales for crude in the last quarter, largely on the back of operational efficiency. We've also seen NINL ramping up to around 1 million tons. And iron and crude steel as well as pig iron on an annualized basis has been healthy. In FY23, the company has said that the crude steel production was up 33% with deliveries up 26% on year.
Okay, we're moving on to the next stock in focus. Stock number 2, that is IEX, seen to be buzzing since morning, and the stock is now up 9% in trade-wise. That's so. Let's tell you that on this particular counter, the transaction fees for IEX has been approved at 2 PS per kilowatt, wherein the transaction fees has been approved at the current levels, and this move removes an overhang on the stock. Now, the change in the transaction fees now will hurt the competition and gaining momentum. IEX is now up 2%, and that's an approval coming in for 2 PS per kilowatts for all the exchanges, and IEX is now heading towards touching that 10% mark, now up 9.6%.
What a smart mover in trade. Let's understand the technicals as well, Gaurav. In the last 7 or 5 days or so, it's gone from 125 all the way nearly to 150. So what's your view as to where it's headed?
If you look at the highest daily or weekly charts, we'll find that the stock is trading in a range. As you rightly mentioned, 125 is a good support area, 155 is a major hurdle area. A close above 155 will open the roads for another move towards 170, 175. If somebody wants to buy only once it sustains above 155.
Okay, so those are the technical levels to be watched out for IEX. But moving on, let's switch to the financial space. And Vamakshi, coming to you for your first stock, you have picked up Chola Finance. Tell us what's the news flow.
Well, Chola investment rather is in focus. We have the stock in focus on the back of a very strong update that came in from the company in terms of its Q4 update. And on the back of that, we're actually seeing the stock surge in trade today, high by almost 7.5% as we speak. Now, disbursements this time around stood at 21,000 odd crores, and this is an uptick of nearly 65% on a year-on-year basis. But more importantly, it is a 20% uptick coming in on a sequential basis. For the entire year, the disbursement stood at 66,532 crores, up 87% year-on-year basis. Broad-based disbursement momentum surprised positively for the counter. New businesses constituted nearly 22% of the disbursements. When we look at the collection efficiency, that has also gone up for the counter. It has improved to nearly 130% in the fourth quarter, and this is in turn suggesting an improvement in stage 2 as well as 3 pool assets. Apart from that, the liquidity also continues to be quite strong for the bank. So overall, strong growth in disbursements, good collection efficiency is the reason why Chola Investment Finance is trading away higher in trade today.
Yep, that stock has spiked a solid 7.5%. In fact, Gaurav, let's understand how you're tracking the stock on the charts. Do you believe that now all of the positives are baked in and that to buy you would have to wait for a little bit of a decline or a dip?
As a matter of fact, yes, a small decline would be actually quite good for the stock, and it's giving a breakout. But the point is, when the markets are at the critical hurdle area, if there's some profit booking happening, the stock can also come down. But I think it's a good stock to buy on declines, and overall it can go towards 900 and above.
Sticking to financials, and Ashesha, coming to you for that, you have picked up Ujjivan Small Finance Bank. Tell us what's happening here.
Yes, the stock is in focus on the back of strong operational updates that the company has reported. It has recovered from the lowest point. It is off the highest point of the day rather. But despite that, holding on to gains of almost 1.5%. Total deposits for the company grew up by about 39% on a year-on-year basis and 10% sequentially. They stood at about 25,500 crores as on the 31st of March. As far as CASA growth is concerned, that has also been quite strong. 11% QOQ and 35% growth on a YOY basis as far as CASA is concerned. Total disbursements, meanwhile, have grown by about 23% on a year-on-year basis, and advances stood at 24,000 at the end of this quarter, indicating an uptick of 33% on a year-on-year basis. So strong operational update is what the stock is reacting to. As I mentioned, it is gaining in trade today, 1.4% higher as we speak.
All right, there you have it. That's the view coming in on Ujjivan Small Finance. Moving right on then, Godrej Properties, and from 1,020 to 1,126, Gaurav, in just the last 5 trading days. What are the charts reading?
Well, the stock has given a strong bounce back sort of, and if you look at the daily, weekly, the monthly charts, you find that it's bouncing from a very critical breakout area. 1,020 was a very strong support area, and it's bouncing out from those levels. I think the current move, current upside can continue, and it has a hurdle at levels of 1,200. Once it gives a close about 1,200, I think another push towards 1,300, 1,320 can be seen. And in my opinion, the momentum is quite strong and can surpass the levels of 1,200 coming days.
Okay, there you have it. That's the view coming in on the charts. Moving right on then, let's put the spotlight on TTK Health. That's certainly a newsmaker in trade today, as the company has proposed a delisting of its shares from the bourses. Now, this comes in just a couple of weeks after Sunil Singhania's Abacus Fund has acquired close to a 1.7% stake in the company. Now, the board will be meeting on the 20th of April to consider and approve or reject this proposal. Do remember, they've exited the human pharma business just last year. Currently, they have the consumer product lines like women's deodorant, home care brand, and that currently is in a highly competitive environment as well. Now, that's one of the main reasons that they said that they have decided to delist. Over the past few quarters as well, the operating margins have been in the range of 4 to 9%, and they've said that the long-term business plan would involve rationalization of some of their businesses, expanding into new categories and new businesses which could have different risk profiles and different funding requirements. TTK Health, on the back of that news, is at about 1,300 rupees.
Okay, to the stock number 7, let's go to Gaurav now. Gaurav, you have picked up M&M Finance, and the stock has already seen a move of almost 12% in the past 5 days. You are expecting more upside on this one?
Well, yes, if you look at the overall structure, it has bounced back from the previous breakout retest area. It's clearly forming higher tops, higher bottom. The structure is positive, and as long as it is sustaining above levels of 24 or 30, I think the overall perspective will remain positive for a move towards 275.
Okay, moving on to the next stock and switching focus to the FMCG space now. And from the pack, if you'll see, Dabur is the stock in focus, which is down by 3% as of now, as the company has come up with their business updates where they say that going ahead, there could be a pressure on the margins. For quarter gone by, the overall consolidated revenue growth is expected to be in the mid-single digit, as in India gross margins is expected to show an improvement. But on the flip side, the consolidated gross margins will be impacted mainly due to the currency headwinds in their international business. They are focusing on the increase in the brand spends that is expected to impact their operating margins in the short term. But when it comes to the margin numbers, then operating margins is expected to be lower by around 200 to 200 bips as compared to Q4 of FY22. And on the back of this commentary, Dabur is showing a cuts of 3.3% right now.
All right, watch out for Dabur. But moving right on, then let's put the spotlight on retail. And Aditya Birla Fashion, Gaurav, is what you're picking out. Pretty range bound over the last 6 months or so. Do you believe it's a good time to buy?
It's just bounced back from the immediate support area. The critical supports were placed at levels of 200, 210. The last time also we witnessed a major bounce coming from these areas. So if it's sustaining about 200, there can be some amount of short covering sort of a technical bounce back, and it can head towards the level of 230.
Okay, believe it's day of the financials, and especially from the mid and the small cap names. And Vamakshi, coming to you for the next one, you have picked up Equita Small Finance Bank. Tell us what's the news flow.
Well, Srishti, this counter is in focus on the back of its Q4 provisional update. Now, gross advances for the counter stood at 28,061 crores, up nearly 36% on a year-on-year basis and 13% sequentially. Now, we are obviously seeing that there is some healthy growth in advances, but this growth is mainly coming in from healthy disbursements. Now, disbursements for the quarter stood at 5,917 crores, which is a uptick of 80% on a year-on-year basis and 23% on a sequential basis. The deposit traction as well has remained quite strong. Deposits stood at 25,381 crores, an uptick of 34% year-on-year and 8% on quarter-on-quarter. CASA deposits, however, have remained flat on a sequential basis but are up 8.9% on a year-on-year basis. But it is the CASA ratio that has moderated to 42.3%, down nearly 400 basis points quarter-on-quarter. But nevertheless, we're seeing some very strong growth come in on the advances front, as well as some very strong traction in the deposits, and that is the reason why the stock is holding very strongly in the green today, up nearly 6% as we speak.
At the day's high for Equitas Small Finance Bank. Let's move on then, Ashesha, and no surprises to see a metal stock on your list. So let's discuss Tata Steel.
Well, yes, this one is in focus on the back of operational updates that the company reported post-market hours yesterday. India deliveries have seen an uptick of about 9% on a sequential basis, and the company, in fact, has registered highest ever quarterly deliveries in the quarter gone by. As far as Europe deliveries are concerned, that too has seen an uptick of about 7% on a sequential basis, and that is on account of improving demand environment in the European region. Meanwhile, India crude steel production has seen an uptick of a marginal 3% on a quarter-on-quarter basis, as they stood at 5.2 million tons this quarter. So operational updates is what the stock is reacting to. It is mildly in the red, 0.4% lower, but strong operational updates have come in from the company.
Okay, so that was Tata Steel for you. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back. You're watching Market Fatafat on ET Now, a show where we tell you all the buzzers in today's trading session right now, either on the back of news flow or technicals. But a quick look at the markets, where Nifty Bank has now lost all its morning gains and is trading flat right now, just entering that red territory. And Nifty 50 is also holding a minor gains of around 16 odd points. Maybe the expiry action playing in. But getting back to the stocks in focus and moving focus to LIC Housing Finance. Why this particular stock in focus? As the company has informed the exchanges regarding the appointment at the chairman post, wherein M. Sri Siddhartha Mohanty has been appointed with effect from 5 of April. Nevertheless, all these financial space are buzzing, but LIC Housing has a news flow for itself as well, and the stock is holding up with a gains of around 3%.
All right, that's LIC Housing for you, but let's shift gears then and discuss it on the technicals as well. And Gaurav, going by the kind of price action that we're witnessing today, what exactly is your view on LIC?
See, after a brief period of consolidation and fall, we have seen it bouncing from the immediate support area. So as long as it sustains above levels of around 310, I think some more upside towards the level of 355, 360 can be seen. That is level from where we witness a small breakdown sort of coming in. If that is sustained, we may see some more short covering. But for time being, it can move towards the level of 355 or 360.
All right, that's the view coming in on LIC Housing Finance. That's the 6-month chart showing you a downtick in double digits. Infosys, meantime, in the news today, as the company has collaborated with LexisNexis. This is to provide information services across content, enterprise and products applications. They said that this will provide end-to-end information services across the range of content and enterprise, and will also provide strategic consultancy for the company's downstream discretionary and strategic spends. Jagged edges on Infi at 1490.
Okay, sticking to the IT space, Gaurav, from that pack you have picked up HCL Technologies. The stock is one of the top Nifty 50 losers today. Are you looking for a sell side on this one?
See, it's going to consolidate a bit. There's a falling trend line hurdle that is placed at levels of around 1110, 1115. So as long as it does not go above that, I think buying fresh would not make sense. Rather booking some profits that would be more meaningful at this point. Below 1050, I think the pressure can mount and it can slip towards a level of 980, 990.
Okay, that's the view coming in on that stock within the IT space. Vamakshi, meantime, let's discuss Avenue Supermarts. What are the operational updates?
Well, a weak set of operational updates that has come in for this counter, and we're seeing that the throughput has disappointed, but nevertheless the store count is in line with what the street was largely expecting. Now when we look at the revenue for quarter 4, that is seeing an uptick of nearly 20.1% on a year-on-year basis to nearly 10,340 crores, but on a quarter-on-quarter basis this is a dip of almost 8.6%. For Q4 FY23 revenue that saw growth of nearly 20.1%, the company actually implies an upside of in terms of revenue of nearly 18.6% on a 3-year CAGR basis. In Q4, the company ended up opening 18 new stores versus 21 stores that the company added in the same quarter last year. And with the addition of 18 stores, the total tally of stores has now come up to 324. Average revenue per store came only at 2.3% higher on a year-on-year basis, and in fact average revenue per square feet disappointed at -3% on a 3-year CAGR basis and -2% on a year-on-year basis. So definitely a weak set of operational numbers that have come in for Avenue Supermarts, and that is the reason why the stock is declining in trade today, down nearly 4% as we speak.
Well, yes, Avenue Supermarts is in focus today. But moving on, and Gaurav, for the next stock, once again, a financial name, Canfin Homes. How are the charts looking like for this one?
Canfin Homes has bounced back from a very short-term rising trend line support area, and once it sustains levels of 540, the current move can push it again towards the low 600. This is the level from where the stock has been finding strong hurdle. So one will have to review at that time how it behaves, but for time being, another 35 points upside cannot be ruled out.
All right, 3.5% higher in trade. Let's get a move on then. And at number 17, Shesha discussed Rail Vikas Nigam.
Well, absolutely. This one is in focus yet again on the back of an order win. The company has informed the exchanges that they've emerged as L1 bidder for provision of E1 based automatic signaling project in division of Northern Central Railway. The cost of this project stands at about 121 crores. On the back of this, the stock is in focus. Remember, this project has to be completed within a period of 545 days. The company's order book stood at about 55,000 crore rupees at the end of third quarter, and the company has informed the exchanges about new order wins to the tune of 11,500 crores in this quarter. So the stock has been buzzing over the last many trading sessions on the back of order win, and another order win that the company has informed the exchanges about to the tune of 121 crores. So that's the reason RVNL is in focus today.
Okay, moving on, and Gaurav, coming to you for the next one, you have picked up ONGC, quite a volatile counter on the back of the global crude oil prices. Under pressure today, but looking at the recent up move, are you looking for a buy out here?
See, on the daily and the weekly chart, it is forming series of higher tops, higher bottoms, so the trend is certainly positive. At this juncture, any declines towards 145, 146, I can definitely be a decent buy, keeping stop loss of 140 and playing for targets of 165.
Okay, there you have it. Targets of about 165 there. Moving right on, let's discuss IT. That's in a bit of a weak spot today. And Gaurav, why are you picking our Tech Mahindra?
So this has moved up sharply, and after that we have seen it's forming early signs of double top formation happening around levels of 1160. And sustaining those levels, it's coming back again lower, and currently it's trading below the confluence of moving area support of 1095, 1100. So as long as it's below 1100, it can slip slightly lower towards the level of 1050, 1045. At that point, one will have to review, but for time being, it looks slightly weaker, and we can see another round of profit booking coming in the name.
The view coming in on Tech Mahindra. But moving on, wherein Pankaj Tebriwal, who is the Senior VP and Fund Manager of Equities at Kotak Mutual Fund, believes that the next 6 months will be ideal for the bottom-up stock picking from manufacturing to pharma and cement. What are his views on these specific sectors? Let's listen in.
Next 6 to 8 months will be a great time from a bottom-up stock picking, because the contours of broader macro construct is very strong, and I believe that many companies from here on over the next 5 to 10 years will become very big in size, provided we pick up the companies carefully. And my sense is that manufacturing is one area where we have been positive on, and we believe that it's a multi-year growth story, and kind of changes we are seeing at the ground level makes us believe that many of the winners of the next cycle will be from this space. Also, financials continue to do well. Selected NBFCs and private sector banks where we are positive on. The third sector where we are incrementally evaluating, and almost 4 to 5 years of price as well as time correction has happened, and valuations have started to turn attractive, is pharma. And we believe that there are many good quality companies with strong balance sheets and cash flows there. And selectively, we are evaluating pharma as a incremental investment space. Also, on a cement, we believe that incrementally things have started to turn positive. The cost pressures have started to ease, and the outlook on profitability has started to improve. And this is one sector where, going into the next couple of quarters, we could see earnings actually being revised upwards rather than downwards. So I think these are the 4, 5 places where we are trying to hunt for the best of the companies and from a bottom-up stock picking approach.
All right, and as we take a quick break right here on the show, what should one do for the perfect investment portfolio as an entrepreneur? That's the question that I'm sure bothers a lot. And to answer these questions, Leaders of Tomorrow brings an insightful conversation. There's Sunil Subramaniam, MD and CEO at Sundaram Mutual, who shared his insights on understanding the markets and investment options, as well as top sectors for investors to invest in. We also had Amrit Kal and many more on Leaders of Tomorrow.
If you had the top 4 or 5 tips, and like you said, you yourself had to learn about the markets. So from that experience and that journey, the top 4 tips or the top 3 tips you want to give our entrepreneurs who are making the wealth, but how to manage it.
So first thing I would say is that don't DIY. Do not do it yourselves. The markets are like a Formula One race, right? And the road is not like a Formula One road. It's a very rocky, bumpy road. So I think the first thing is get an advisor. Second, I would advise, and I think today the finance minister has also supported, I think ultimate wealth creation will happen only from equities, not from debt. Okay? Debt is a wealth protection tool, not a wealth creation or a wealth growing tool. Third aspect, the tip I would say is, having chosen equity, if you believe my thing and take that, volatility is your best friend. Pick the times when everybody is fearful, when there is high volatility. The more you allocate into that market at that time is when your wealth creation will be, right? So that's the third tip. The fourth tip is that with the help of the advisor, every single investment you make, right, barring none, write down what is the purpose of that investment. Every single one, right? Do not do that, because the biggest problem with most people's investment is they don't know when to redeem. When do I take the money out? So unless you specified a goal at the time of investing, then when that goal gets reached, ruthlessly redeem your money.
And to understand the investment fundas, do not miss to watch Leaders of Tomorrow tonight at 10:30 p.m. only on ET Now. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back.